Hey everyone, welcome back to Corporate Decoder. Today, Cantor Fitzgerald Income Trust, Incorporated CFTR. PA just filed an 8K detailing their latest distribution, and I am seeing a key detail about how they're paying it out. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows us how the company is distributing money to shareholders, and importantly, where that money is coming from. So what we have here is a current report filed because of a significant event that they want to share pretty quickly. This is an 8K filing, and it is all about their distributions. The really interesting part is the May 2026 distribution. The company's board of directors approved these dividends, and they're specific to each class of common stock and operating partnership units. For example, Class I shares are getting a gross distribution of about 8.5 cents. Then you have Class D shares getting a bit less at 8.1 cents, and Class S and Class T shares at about 7.1 cents each. There are also various Class X shares and operating partnership units with their own specific amounts. What's crucial here is not just the amount, but how they're paying it. The filing mentions that these distributions to holders on record right before the end of May will be paid on or around the 5th of June. And here is that crucial detail I mentioned. Some or all of the cash distributions may be paid from sources other than cash flow from operations. This means the money distributed to shareholders might not be coming from the actual profits the business generated recently. It could be from selling assets, borrowing money, or using cash reserves. Think about it like this. If a friend pays you back for dinner not from their paycheck, but by taking money out of their savings account, that is a similar idea. It is paying a bill, but not from the income earned that month. For a real estate investment trust like Cantor Fitzgerald Income Trust Incorporated, which is dealing with properties and rent, cash flow from operations is their main source of income. When they say distributions might come from other sources, it is a signal that the cash generated from their ongoing business might not be enough to cover these payouts. This is a bit like what we saw with Bed Bath and Beyond a couple of years ago. While they were trying to stay afloat, they kept paying dividends and other distributions for a while, even as their core business was struggling. This strategy can buy them time, but it is not sustainable in the long run if the underlying operations don't improve. It can sometimes be a sign of underlying financial pressure, where a company tries to maintain shareholder returns even when cash generation is weak. In this specific filing, there are no previous periods for direct comparison within the text provided. However, the phrasing itself is the key takeaway. It introduces a level of uncertainty about the sustainability of these distributions if operational cash flow doesn't pick up. Scroll Cantor Fitzgerald Income Trust, Inc. by 20 for Christopher A. Milner. Scroll the report is signed by Christopher A. Milner, who is listed as president. This is standard procedure for these filings, confirming the accuracy of the information presented on behalf of the company. Now, looking at this filing, Cantor Fitzgerald Income Trust, Incorporated is clearly making distributions to its shareholders. The amounts vary by share class, which is typical for companies with different types of stock or units. But the big story here is the potential use of non-operational cash to fund these payouts. This raises a question about the company's ability to generate sufficient cash from its core business activities. While not an immediate red flag, it is definitely something investors should keep an eye on. If this method of funding distributions becomes the norm, it could signal potential financial strain down the line. What I am watching for is any future filings that might clarify the exact sources of these distributions or show improvements in their operational cash flow. For now, it is a detail that warrants attention. Alright, that is our breakdown of this Cantor Fitzgerald Income Trust Incorporated filing. What is your take on these distributions and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you want to support the channel, like this video, subscribe and join our Discord community linked below.